Okay. Record na. Okay. Now let's start with P31, a payroll computation with incentive bonus. Now for the requirements, determine the hourly bonus rate. Round the bonus percentage to 4 decimal places and the bonus rate to the nearest whole percent. Now we have 15 workers that are assigned to a group project. The production standard calls for 500 units to be completed each hour to meet a customer's set deadline for the products. If the required units can be delivered before the target date on the order, the customer will pay a substantial premium for early delivery. The company, wishing to encourage your workers to produce beyond the established standard, has offered an excess production bonus that will be added to each project employee's pay. The bonus to be computed as follows. So we have now letter A, group success production over standard times 50% divided by the standard units for the week. So you get the bonus percentage. B, individual's hourly wage rate times the bonus percentage equals the hourly bonus rate. The hourly wage rate plus the hourly bonus rate is the new hourly rate for week. The total hours worked times the new hourly rate equals the earnings for the week. The production record for the week shows the following: hours worked, then we have production units. For Monday, hours worked 112 and the production units is 61,040. So up to Saturday, the total hours worked 616 with 330,528 units. So let's start now with requirement number one, the actual production for the week of 330,528. The standard units is 500 units each hour. So 500 units times 616 hours equals 308,000 units. So there is an excess units over the standard of 22,528. Now, the computation of the bonus percentage, the excess multiplied by 50% divided by 308,000 units, standard units. So, we have 3.657%. Now, for requirement 1. For requirement 2, what are the total wages of L with Marchen who worked 40 hours at a base rate of $15 per hour? So we have now 15, the hourly rate multiplied by 3.657 bonus is 0.55 per hour for the bonus. Then you add it to 15 as the hourly rate. So you get 15.55 hourly rate for the week. And 40 hours times 15.55. So he gets $622 total wages for the week. What are the total wages of our Emerson who worked 35 hours at a base rate of 20 per hour? So 20 times 3.657 is the bonus rate. The bonus is 73 cents per hour. Then you add it to 20 as the bonus or as the base rate. The hourly rate for the week is 20.73 multiplied by 35 hours. So he gets 725.55. Next, we go to 3.33. Required labor time record, direct versus indirect labor. Adam Amos is a grade 2 machinist who earns $18 per hour. On Monday, June 10 through Wednesday, June 12, he worked 4 hours per day on each jobs. On Thursday, he worked 6 hours and 2 hours on maintenance, while on Friday, he worked 4 hours and 4 hours on maintenance. His supervisors, Emma niya Ondo, signs off on all labor time records on Saturday of the week just ended. Prepare a labor time record for Amos for the week ended June 15, 2016. Now we have for Adam Amos. Compute the amounts of direct labor cost by job and indirect labor costs created by Amos' work for the week. So first we have to prepare a labor time record. So we have now the employee is Adam Amos with employee number. Then the employee classification is grade 2 machinist. Now, for the labor time record, here we have the job number where Amos worked. So, EX 20 and EX 25. And then he also worked as a maintenance crew. We have now from Sunday up to Saturday. So with the EX20 on Monday he worked 4 hours. That's 4 hours per day on each jobs AX20 and AX29, 25 from Monday, Tuesday, and Wednesday. So he gets 4 hours per day. And on Thursday, he worked 6 hours only on job EX 25. That's on Thursday. And 2 hours on maintenance. So 2 hours on maintenance siya on Thursday. While on Friday, he worked 4 hours on AX 25. 4 hours siya. And 4 hours on maintenance. His supervisor, who signs off on all labor time records on Saturday of the week, just ended. So Saturday, all zero. So the total for job order EX20 is 12 hours. For 25 is 22 hours. Maintenance, 6 hours. So the total for Sunday, 0, Monday, 8, Tuesday, 8, Wednesday 8, Thursday 8, and Friday 8. Saturday is 0. So the total is 40 hours. Okay, now that's the labor time record of Adam Amos. The amounts of direct labor cost by job, as you have to remember that once the work is related to a job order, that's direct labor. While on maintenance, it's indirect labor. So direct labor cost on job EX20 is total of 12 hours times the rate of 18. And on job X25, 22 hours, so you get 396 and 216. So the portion which is indirect labor cost for maintenance is 6 hours times 18. So you get 108. Next, we go to problem 3-6. 3-6. Actually, 3-1, 3-3, and 3-6 are all your assignments, while the other two problems are extra problems that I'm going to discuss. So in 3-6, computing and journalizing employers' payroll taxes. So for requirement number 1, using the above form, calculate the employer's payroll taxes for April. Assume that none of the employees has achieved the maximums for FICA and employment taxes. Two, assuming that the employer payroll taxes on factory wages are treated as factory overhead. The taxes covering administrative salaries are an administrative expense, and the taxes covering sales salaries are selling expense. Prepare a general journal entry to record the employer's liability for the April payroll taxes. So here you find the unemployment taxes, and we have the FICA tax. Now we have federal tax and state tax for unemployment, and we have the total payroll. Direct labor classification, indirect labor. Then we have the payroll taxes on factory wages, and we have for administrative and sales salaries, giving the total payroll taxes. So for requirement number one, using the above form, so we just copy employees name. So we now have the employees, and then we have the number of hours, and we have the regular earnings, overtime premium, the idle time included in regular earnings, total earnings. Then you have the FICA, 8%, income tax, 18%, and the net earnings. Okay, so we now get the form as given in 3-6. So we now have the employees. The supervisor is Klimbara, and then we have the workers, Cow, Okoth, Perry, Tate, Olo, and Khan. So we are given now in the problem, the number of hours, 42, 45, 48, 48, and then 45, 42, and 40. Then for the labor time, records out our distribution. So we have now van number 1 up to number 5. Okay, so we now get the number of hours for the regular earnings for Klembara. Now the regular earnings, but we are given the total here. We are already given the total. However, we are going to state the individual salary. We have a rush order was accepted by Barclays conversion. That's in problem 3-5, and we are now given the labor time records for the week ended January 27, showing the following hours. Hours not work on vans are idle time and are not charged. So in all employees are paid $20 per hour except Klimbara, who receives 25 per hour. All overtime premium pay except Clembaras is chargeable to the job, and all employees, including Clembara, receive time and a half for overtime hours. So, in other words, we are going to use the rate of uh, 25 for Klimbara multiplied by the number of hours. So she gets 1,050. The rate of Klimbara is 25. And now the total earnings of 1,050, then we add 1,075. Actually, the employee gets time and a half for overtime hours. So, in other words, for the basic of 25, then she gets 12.50. I'm now referring to Klimbara. So if she works 42 hours, in other words, she gets an overtime of 2 hours. So 2 hours multiplied by 12.50. 12.50 is the overtime premium because the overtime is charged 1.5. So meaning if the rate is 25, so the rate now becomes 37.50 as the rate overtime rate. So the overtime premium is 12.50. And then 12.50 we multiply by 2, that gives us 25 for the total earnings of 1,075. So we now get FICA 8% if the rates are still the same rates as given. So we have now the rate of 8% FICA. Income tax is 18%. Then we have the net earnings, 1,075. We deduct 86 and 193. So 86 and 193 is 279 that we deduct from 1,075. So the net amount of 795.50 since we have income tax equal to 193.50. Now for cow, the basic rate of cow is 20. So 20 multiplied by 45, the basic is 90. Now the overtime rate for cow is 30. That's 20 multiplied by 150%. So it's equal to 20 plus 10. So it gets 130. And 30 we multiply by actually 30 minus 20. So the overtime premium rate is 10, then 10 we multiply by 5. Any number of hour in excess of 40. So meaning 10 times 5 is 50. Total earnings 950, so the net earnings is 703. For OCOS, the rate is 48 ang basic rate ya, 960. So the overtime premium rate is 10 multiplied by 8. That's in excess of 40. The same with Perry. For Tate, it's 45 minus 40. So you get 5 multiplied by 10. And Olco, 2 times 10 is 20. Now, Sikan, wala overtime. So we now get the net earnings, total earnings, and then we have the FICA tax, the income tax, and the net earnings now for 4,969.10. For our requirement in here, we have for 3-5, no? We are using 3-5, but we will continue with 3-6. So the entry requirement number 2, the journal entries to debit payroll 6-7-15, credit the income tax and the FICA tax. So the net amount is the net earnings, then we pay. Then we also debit to work in process 5,240, and we debit to factory overhead for 1,475, credit total earnings of 6,715. So we have the total payroll, and then we have to deduct the idle time 20 hours times 20. Okay, so we have the idle hours equal to 20 times the basic rate of 20. And then the supervisor, that's 1,075 because it will be charged to indirect labor. So work in process, 5 to 40. And then we have your factory overhead for the idle time and for the supervisor's salary. Now take note that here we have the number of hours worked for labor time records, our distribution. So for take note that for uh, cow, total number of hours work is 45. Then for OCOS, it's 48 as the sum, 48 for Perry, and 45 for Tate. That's the records, our distribution. So for Ulo, it's for only 32, meaning there is an idle time of 10. For kay ang kay ulo ang hours siya 42, pero ang pag-distribute 32 lang ang actual nga hours. So in other words, may ara nga 10 hours nga idle. Sa kay kan 40 minus 30, so the idle time of kan is 10. So the total idle time is 20. You multiply by the number of hours, 20 times 20 as the basic rate. So we now debit idle time to factory overhead the same with indirect labor, the salary of the supervisor. Okay, then we go to requirement number 4. Determine the dollar amount of labor that's chargeable to each one, assuming that the overtime costs are proportionate to the regular hours used on the vans. First, compute an average labor rate for each worker, including overtime premium, and then use that rate to charge all workers' hours to vans. Round the labor rates to the nearest whole cent. Okay, so we now go to requirement 4. Since overtime is proportionate to regular hours chargeable to vans, an average labor rate, including the overtime premium, can be calculated and used for distribution. So we now have the total hours charged to vans. Actually, these are the productive hours. So for Cow, Ukot, Perry, and Tate, their hours work actually were distributed to the bands. But for Ulo and Khan, actually they had idle time, totaling 20 hours. So for the total earnings chargeable to bands and for the average labor rate, including the overtime. So if you look at now cow and here, total earnings chargeable to bonds for total earnings of here 950, 1040, and 1040 here. And then for tate, ulo, and kan, so we have now for tate, it's 950, ulo and kan 860 and 800, no? However, we are going to deduct the amount applicable to the idle time. So the 10 hours idle time is for 200 for each of ulo and kan. So we now determine the average labor rate, including the overtime for the week for each worker. So distribution of labor costs to vans using calculated average labor rate. So you now get 950 over 45. Distribution of labor costs to vans by using the average labor rate. So now for cow, we get van number one is 211.10. Now that's for cow, multiplying 10 hours allocated to van number one, and you multiply that by 21.11. For cow again, for van number two, it's here. For van number two, it's also 10 hours. The same with van number three and number four. Van number five is only 5 hours. So the total is 949.95. Actually, total earnings chargeable is 950. There's a rounding off discrepancy of 5 cents, which you may also get rid by distributing this to each van numbers. Now for all costs, you get 1,040. Again, we use the number of hours distributed multiplied by the hourly rate. So we now have number 4. Now we go to number 6. 3-6 are two requirements. Using the above form, calculate the employer's payroll taxes for April. So we have now direct labor total of 88,180. That's total earnings for the month. And indirect labor 16,220 given. So the total taxes on factory wages, we have now FICA tax 8%, the unemployment taxes of 1 and 4%. So we just multiply for FICA tax, we multiply the amount of the total earnings at 8%. So we now get 7,054, federal tax 1%, and state tax 4%. So the total payroll taxes imposed on employer for the direct labor. We are asked, number one, using the above form, calculate the employer's payroll taxes. In other words, the payroll taxes that will be paid by the employer should not be deducted from the salary of the employees. The employees will have their own deductions because actually for taxes there are employers taxes payable, and sometimes uh, employers will pay, no, depende kay may ara man nga wala na mga unemployment taxes, but if it is a requirement of the law of the government, then the employer must pay. Now, there are deductions from the salary of the employees. So, oftentimes, the employer pays an equal amount as what is paid by the employee, except for income tax because that's a personal obligation of the employee. So we have now the total taxes on factory wages. Then for administrative salaries are given, then we multiply by 8%, that's the FICA tax, by 1% for the federal tax, and so on. So we now get the total of the FICA tax and the other taxes, and we now get the total payroll taxes payable by the employer. Now, for entry for requirement number 2, assuming that the employer payroll taxes on factory wages are treated as factory overhead, the taxes covering administrative salaries are an administrative expense, and the taxes covering sales salaries are a selling expense. Prepare a general journal entry to record the employer's liability for the April payroll taxes. So we now debit to factory overhead for 13,572 only for taxes applicable to factory wages. Payroll taxes for administrative, we have 1,560, and for sales salaries, that's an amount of 1,495. So you can simply add or you get the amounts here. And we now credit FICA tax payable, federal unemployment tax, and state unemployment tax. In other words, these taxes are computed based on the payroll, however, the employer shoulders. The amounts payable by the employees are deductible from their salaries. Now we go to 3-10, okay, 3-10, where we have now your, this is quite long problem, however, we are required to prepare the journal entries to record the foregoing transactions, including the distribution of payroll costs. So we now begin with requirement number 1 for the journal entries. So we now begin with January 7. That's the requirement to record the foregoing transactions, including the distribution of payroll costs. So we now debit to payroll 68,200 as given. Then we deduct employees' income tax payable, the rate of 10%. Actually, since we took up the exercises, we already have the tax rate applicable to employees income tax. So we have the rate of 1%, 10%. So credit employees income tax payable 6,820. Credit FICA tax payable. FICA tax payable at the rate of 8%. That's given rate. And so the balance goes to wages payable. The balance goes to wages payable. Now, payment of wages payable, and finally, credit to cash. Now, on January 14, again, we have to record the payroll and the corresponding deductions, and still the payment of wages. On 15th, we have recorded administrative and sales salaries for the deductions, employees' income taxes, and FICA taxes. So on the 15th, we now again debit to payroll and credit employees income tax payable, credit FICA tax payable, and credit to wages payable. Now for the administrative salaries and for the sales salaries. Okay, so we have now your 15th. And finally, the payment on the 15th for wages payable and credit to cash. Okay, then on the 21st, we again have the recording of the payroll, the same entries, the same credits, with difference. The only difference is the amount for each of the tax payable. So 21 again, we have the payment of the wages payable and credit to cash. Then 28, we have another payroll and the payment of the payroll. And finally, on the 31st, we have the accrued wages. So accrued wages, in other words, no payment, we debit to payroll for 28,000 payroll and then credit to employees income tax payable, credit to FICA tax payable, and the balancing figure credit to wages payable. So we finally debit to wages payable and credit to cash. Now these are your entries as required in number 1 to record the foregoing, including the distribution of the payroll cost. Now here we have distribution of the payroll cost. How much will go to work in process? That's for direct labor. For indirect labor, debit to factory overhead. And we have to record administrative salaries and sales salaries. So we have the amounts given for administrative salaries, 20,000, sales salaries, 36,000. And we have the total debit to work in process for direct labor and for indirect labor, debited to factory overhead. Now we credit back to payroll. In requirement number 2, here the problem is asking for the completion of the previous form to show the payroll taxes imposed on the employer for January. So we now have the items, factory wages, administrative salaries, and sales salaries. So we have now the taxable earnings. Here we have the taxable earnings for 325 in requirement number 2, no? So the FICA tax and administrative given. So we have the total of factory wages, sum of 302, 500 and 22, 500. So again, we have to compute for the FICA tax in requirement number 2, and at the same time compute for the employer's payroll taxes. So you will notice that we also have FICA tax payable by the employer. Lain man ang FICA tax payable by the employee. Mutuya ang ginadidak sa ilang salaries. So we now have the federal unemployment tax and the state unemployment tax. So we have now the total payroll taxes. Okay, requirement number 3, prepare the journal entry to distribute payroll taxes, assuming that the payroll taxes imposed on the employer for factory wages are to be charged to factory overhead. The taxes for administrative salaries charged to miscellaneous administrative expense, and 4 sales salaries to be charged to miscellaneous selling expense. So on January 31, we now debit to factory overhead, debit to factory overhead, debit miscellaneous, administrative miscellaneous selling, then credit to FICA tax. We have the computations above. So we have the FICA tax, and then the federal unemployment tax, and the state unemployment tax payable. So we have the total of 15 to 40, 3,810, and 30,480. Number 4, assume that the factory employees work on January 29 to 30 and 31. What was the amount of accrued wages on January 31? Hint, assume that there were no accrued wages at the beginning of the month. So the wages earned and accrued as of January 31 is 302,500, add indirect labor of 22,500. So we get the total less the wages paid of 281,200. So you have the total. So the difference is accrued wages. Okay, now that's 3, that's 10. We have one more problem. 3 does 15. Okay, 3 does 15. The requirements, we have 5 requirements in 3 does 15. Estimating labor cost for bids. So there's a bidding here. Prepare cost estimates for direct labor and labor-related costs for the contract showing the following. So number 1, wages paid at the regular rate. So we now have the company prepares cost estimates for projects on which it will bid. To anticipate the labor cost to be included in a request to bid on a contract for 1.2 million units that will be delivered to the customer at the rate of 100,000 units per month, the company has compiled the following data related to labor. So the first 100,000 units will require 5 hours per unit. Second 100,000 units will require less labor due to the skills learned on the first 100,000 units finished. It is expected that the labor time will be reduced by 10% if an incentive bonus of one half of the labor savings is paid to the employees. For the remaining 1 million units, it's expected that the labor time will be reduced 20% from the original estimate, the first 100,000 units, if the same incentive bonus, one half of the savings paid to employees, and overtime premiums are to be excluded when savings are computed. The contract will require 2,250 employees, base rate of $20 per hour, with time and a half for overtime. The plant operates on a 5-day, 40-day per week. Employees are paid for a 2-week vacation in August and for 8 holidays. The scheduled production for the 50-week work year shows January to June, 26 weeks with 4 holidays. July to December, 24 weeks with 4 holidays. So we first begin by computing the cost estimates for direct labor and labor-related costs, showing the wages at the regular rate. So ours required the first 100,000 units at 5 hours per unit. So you need total of 500,000 hours. Second, 100,000 units at only the rate is reduced, no? It will reduce labor time by 10%. So the labor hours will be reduced by 10%. 10% of 500,000 is only 450,000. And the remaining 1 million units at 5 hours per unit, it will be using only number of hours reduced by 20%. So 5 million times 80%. So only 4 million hours. So total hours required is 4,950,000 hours, and the hourly rate regular is $20. So you now get the regular rate of $99 million. Then we deduct the regular hours available. 2,250 employees at 40 hours per week multiplied by 50 weeks. So you get 4,500,000 hours. We deduct the holidays, 8 holidays at 2,250 employees times 8 hours per day. Now, considering that the workers work a total of 8 holidays during the year, so 144, we get the difference. That's for the regular hours, 4,356. Total hours required is higher. So the overtime hours required is 594. And by the way, take note that all of these are merely estimates. So the remaining, the bonus, or we have now the overtime premium is equal to 594,000 hours. The overtime premium is equal to 10. The regular rate is 20. The overtime rate is 30. So the overtime premium rate is 10. Now requirement 3, incentive bonus payments. So we have now the second 100,000 units. Per unit cost of first 100,000 units, 5 hours times 20. So we have 100, then the expected savings per unit is 10% times 100 is equal to 10. So the total savings is 100,000 units times 10 per unit equals 1 million. Bonus payment on second 100,000 units is one half of 1 million savings. So it's $500,000. So on the remaining 1 million units, the per unit cost of first 100,000 units is 100 as computed. The expected savings is 20. So the total savings on the 1 million units is 20 million. So the bonus payment on remaining 1 million units is one half of the 20 million savings. So 10 million. The total incentive bonus payment is 10.5 million. That's in requirement number 3. And requirement number 4, vacation holiday pay. The vacation pay of 2,250 employees times 2 weeks times 40 hours per week. So 180,000 hours. The holiday pay is now for an equivalent of 144,000 hours. So total hours is 324 hours multiplied by the rate per hour of 20. Then last requirement, employer payroll taxes based on all employee compensation over the contract term. 13% of total wages, assuming that no employee has exceeded the wage basis for FICA and the unemployment insurance taxes. So the wages at regular rate, 99 million, overtime premium, incentive premium, and vacation holiday pay. So the total payroll is 121,920,000. The payroll taxes of 13%. That's given. Okay, for 3-15. Now, actually, this is merely an estimate. Okay, now we will take up the mini case number 1 for at least mini case number 1. Kelly is considering the implementation of an incentive wage plan to increase productivity in a small manufacturing plant. The plant is non-union and employees have been compensated with only an hourly rate plan. Julie Phelps, Vice President, Manufacturing, is concerned that the move to an incentive compensation plan will cause direct laborers to speed up production and thus compromise quality. How might Kelly accomplish his goals while alleviating Phelps' concerns? So a piece rate plan provides an incentive to employees to produce a high level of output, thereby maximizing their earnings and company production and revenues. However, a serious shortcoming of such plans is that they may encourage employees to sacrifice quality for quantity. One solution is to adopt a piece rate plan based on the production of good units only. Number 2, does the compensation have to be an hourly rate on all incentive? No. The compensation may be a combination of hourly rate and piece rate plans because such a modified wage plan provides a base hourly wage regardless of the level of production. It may cause employees to feel less pressure to maximize quantity at the expense of quality. Number 3, can incentive compensation also apply to service businesses? Yes, this plan is often used in service businesses. For example, salespersons in retail store, real estate agents, and insurance agents are examples of workers whose compensation is often either on a salary plus commission or all commission basis. Now I will give you the solution to mini case number 2. Just study this. Mini case number 2. Okay. Mini case number 2. Here you have the concluded solution. Prepare journal entries to illustrate the position you support, including the accrual for the bonus. Okay, so tomorrow we are going to take up chapter 4 for factory overhead. Okay, so that's enough. Okay, make it come down. start man mga 8:30 na, no?